you. Really nice to be here to talk about risk management from another perspective. I'll just invite my co-panelists to come up and join the stage with me. We definitely have a really interesting panel for you today. I mean, all the topics have been absolutely wonderful so far, but I have heard from quite a few of the discussions that compliance tends to be one of the sticking points, one of the issues where we either need more education or it's one of the elements that needs to be addressed before we can grow. We need more information with regards to knowledge transfer. We need to continue to work with regulators. Internal buildup of know-how on compliance is not easy. So we're going to talk about that in the context of risks with my esteemed panel, and I'll just allow them each to quickly introduce themselves and the products that they offer in the crypto space. So do you want to have a start, Lucas? Go right ahead.
Okay, thank you. We'll keep it short. I'm in Bitcoin since 11 years. I work in this industry since 10 years. And since 4 years ago, we founded 21 Analytics, where we provide a software solution for transfer in and out, meaning travel rule and ownership proof. That's our core solution.
So when we talk about private wallets, banks interacting with private wallets, they have a solution for you. Yeah.
Hello, I'm Pierre. I'm the CEO of Scorechain. Scorechain has been in business since 2000. Okay, it's better now. Okay, I'm Pierre, CEO of Scorechain. Scorechain has been in the business since 2015. We are a blockchain analytics platform, mainly providing a KYC, know your transaction solution for any customers having to deal with AML and CFT. We are based in Luxembourg. We are purely European and active in more than 45 countries today, and also working with companies like 21 Analytics.
One, two, okay. Hi, my name is Ilya. I'm Chief Growth Officer at SumSub. We are a large KYC AML compliance provider working with over 2,000 clients. About half of them are crypto, so we're very big in crypto. We offer services all the way from pre-onboarding screening to onboarding KYC AML, as well as ongoing compliance and transaction monitoring. Travel Rule is another product we offer. We also work with 21 Analytics, know them very well. So yeah, happy to be here.
Thank you, Chris, and good to be here as well. My name is Aruliah. I work at Elliptic, another blockchain analytics firm. So it basically helps you visualize the transactions, due diligence, all these kind of things that we've been talking about today when it relates to analytics. I work in the regulatory team. Before this, I was really a long-term regulator at the UK's Financial Conduct Authority. I was in capital markets, but also introduced the crypto asset changes to the UK's money laundering regs. So I see it from sort of both sides of the fence, but good to be here.
Great. So this session, we'd like to make it a little bit more interactive if possible. We'll kick it off with a couple of questions, but then we'll open it up to the audience. So if you have any questions for AML experts or service providers in the AML space, this is your time. So the topic for today is obviously risk management in the AML space. So I'll just kick it off by asking our esteemed gentlemen here to maybe share your views on how risk management, specifically in the financial services area, and perhaps even specifically for banks, has evolved over time. What are you hearing from your clients? What are you seeing in terms of trends and how risk is managed? Who would like to start us off?
I'm happy to kick it off. So I think there's many things which are similar to traditional risk management, but there are some things which are different. So the traditional are criminals, bad actors are criminals. So therefore, the behaviors, the characteristics, so we call them typologies, are very similar when you think of traditional finance and you think of crypto. Where crypto changes, it's because it disintermediates transactions. With banking transactions, it's typically bank to bank and there's KYC. But in the crypto world, there's disintermediation and there's analytics companies, which gives you sight of the whole ecosystem. And that whole ecosystem, you need to understand what risk is and how do you manage that. So your compliance framework has to develop in that basis. I think those are broadly where I see similarities and differences.
Yeah, maybe I can add that the main difference is how it is implemented. I like to say that if you're traditional finance, you see the banks, you see the actors, but you don't see the transactions. And in the blockchain, it's totally the opposite. You see all the transactions, but you don't know who is behind. And first of all, you have to identify, to assess the risk for each wallet, And if you have to monitor all the addresses of an exchange, for instance, Kraken, we are monitoring millions of addresses of exchanges like Kraken in real time. So it's, the implementation, at the end, they have to compliance officer from a bank or from an exchange or in a bank dealing with crypto. They have to identify the origin of funds and the risk of counterparties to assess all this kind of risk. But the architecture, the underlying implementation of the technology is different. And this is why it's a new paradigm, and we have to teach them, they have to learn a lot. But at the end of the day, it's the same job. Yeah.
And I just want to add as well what we're seeing in the market in terms of banks. I think there's sort of two main areas. One is banks taking on fiat bank accounts of a VASP, and that's going to come from MiCA. If you're not a credit institution or a payments firm, then you as an exchange have to put your money overnight with a credit institution. We see different jurisdictions also doing that. So the first one is just due diligence before you take on a fiat bank account. The other aspect is, again, something that's been discussed here. As a custodian, how do I look at deciding whether I'm going to act for a particular VASP? And the last thing is in terms of the travel rule. You can also look at proportionality in terms of risk. Who are my most, if you like, interested counterparties? How do I assess risk? And what kind of due diligence do I need to use that? So it's not just about knowing a transaction. It's also about, do I want to take this person on as a customer?
What I really like about the crypto space is a lot of the industry actors have been quite active in addressing some of those risks. When we talk about travel rule, lots of solutions have become available in the market. When we talk about assessing counterparty VASP risk, we have tools available like the virtual asset due diligence questionnaire that's been put out from the Wolfsburg Group or together with other GDF and other big players. So we've collaborated quite a bit as an industry to address some of those risks. Would you like to add some thoughts on?
I agree with Pierre said that the completely different technology stack I think presents the most challenge specifically for banks. I think because they are coming off years or if not decades of built-in legacy systems and processes, and to marry it with kind of real-time and fully remote dealing with individuals and also businesses is a completely different paradigm. So I agree that the whole stack needs to be rebuilt, and the particular challenge as well is from the regulatory side. A lot of times it's unclear how do you take then and apply regulations that have been built for pretty much a traditional financial system and apply them to a system where it almost doesn't work. And we can talk about things like, again, can you identify individuals or wallets without passing personal data, for example, right? So these are questions maybe for a couple steps further down the line, but even today it's hard to take traditional regulation and apply it to the crypto space.
So maybe just to make it very practical for people who are in the audience who themselves have to manage risk or have to make decisions about solutions to manage risk. We've talked about what the risks are, where the challenges are. Maybe what we could do is do just a quick round to talk about how your particular product or solution is helping or would help a bank or financial institution to address one of those particular risks. Maybe name just one or two where you could say, hey, if you come to us, this is this area of risk where we will be able to help you out. Would you like to start, Lucas? Yeah.
Sure. I think the great thing about Bitcoin, or crypto in general, but I always say Bitcoin, is that you actually get freedom to transact with anyone, right? I can send from my bank account Bitcoins to Chris's ledger. That's something I can't do in the fiat world. I can't tell my bank, send some cash like physical cash to Chris. So that's something you can do in Bitcoin, but it's kind of something the regulator more or less killed a bit. At least with the travel rule and everything, because you need to provide proof that you actually control this wallet, or Chris would have to do that to my bank, and she would have to onboard with my bank just to receive money from our bank. So, long story short, that's a bit the sad part. What we do is we give you a solution that your customer still very conveniently can provide the proof that he himself actually controls that wallet. So the transfer in and out. With self-hosted wallets, mostly I think that's the easiest. With travel rule, it's possible, but it's very difficult because most likely your counterparty will not play along. So, yeah.
So what's nice is because FINMA was very ambitious with regards to AML very early on, since 2018, 19, with the payment on the blockchain guidance, that we have been innovating quite a bit, I believe, in Switzerland. And 21 Analytics is one of these firms that has come out with a solution, a software solution, for identifying the owners of private keys. So if you've heard from your compliance team, or you've read within regulations that private wallets require identification, this is one of the services, AOPP, that can support you with that. Pierre, you want to continue?
Yeah, but there's a lot of innovation today, as you all know, and so even the regulation is trying to follow the regulation. You know, for instance, the MiCA in Europe is not addressing NFT today. It will be potentially in the next MiCA regulation, maybe in 2025 or later. So we need still to bring a lot of flexibility, and this is how we are, for instance, Scorechain is dealing with all the configurations. So we are doing due diligences on the VASP and getting a lot of information, doing our own due diligence of wallets and trying to identify, assess the risk, giving a risk scoring, this kind of stuff. But we let also the key of the parameters to the customers. And because depending on the compliance policy, depending on the regulation in which countries are regulated, they need to adapt and to be able to change some threshold, or to decide that this is a medium risk or low risk. So today, for Scorechain, the approach is to advise and sometimes with additional partners, some partners like Big Four, for instance, if we are working with a large bank. But at the end, they have the ability to change a lot of customization and to define their own rules that will directly follow the internal requirement.
I think that's very helpful, because in I think it was last year, the FATF just updated their guidance, and in this latest version of the guidance, it's the first time where they really stated very clearly that there's an expectation that VASPs do counterparty due diligence. So if you're offering services like Know Your VASP, I know some of your competitors are as well, but I think yours is very well reputed. That's helpful for people like us at the SIX side who are implementing due diligence of VASPs. We can use the VADDQ to help us do our counterparty due diligence, but having services like yours definitely gives us that second voice and the analytics behind our analysis. Yeah, that's helpful. Ilya?
So we started historically from kind of the side of onboarding individuals, and we've done this for 8 years, onboarded probably over 300 million for now, and doing 10 million per year in crypto space. That means that we see a lot of fraud coming to our clients, and so over time our product has developed into pretty much a full cycle compliance platform that starts with rests on 3 pillars. One is onboarding, second one is anti-fraud, and third one is compliance. And all this tied together, we kind of believe that the only way to stay compliant, you have to see the full picture about the individual, catch out the fraud, and connect this with compliance tools. So that's what we're really building. So that's why, say, Travel Rule fits into the pure compliance. There's lots of kind of internally built AI technologies that help us fight all types of fraud, mules, fraud networks, deepfakes is the hot topic for the last 12 months, so all of that. But then part of what we're trying to do is to build it into a comprehensive system. So actually, we do integrate, companies, blockchain analytics companies. There's something that we're soon maybe hopefully do something together with 21 Analytics. So we're trying to build this into one product so that the customer, a crypto company or financial institution, can use the whole platform and minimize their integration costs and maintenance costs and upgrade costs, but benefit from the whole platform of customers that we have.
So you started as an identity and verification platform, and it's only grown since then.
Very much so, yeah.
Great.
So as an analytics firm, it's very similar to Pierre. I think for me, the way I look at it is that analytics is a tool. It depends on how you build your compliance framework. So we deal with firms, we deal with regulators, we deal with law enforcement. They all use it slightly differently. It's a subset of a tool, which is your toolkit for risk mitigation. I think where I see it, you have the vanilla. You have transactions come in, you screen it, quarantine it, you then let it go to the hot wallet. You screen a wallet before you send it to avoid any kind of sanctions risk that you might be, if you like, exposing your custodian to. You do your due diligence. That's your initial due diligence, the ongoing due diligence. But that due diligence, I call it either first party, third party. So that could be who am I interacting with, but also a custodian, an exchange can use it to look at themselves. Have they set their risk tolerance to the right level? Are they interacting with bad actors that you don't want to, that you set out in your risk objective that you won't do? So again, as I say, it's a tool and depends on your compliance framework. You can use it in different ways.
Mm-hmm. The challenge is always developing the compliance framework, having the qualified expertise within-house on compliance to address those questions and to make the correct risk assessment. It's not easy to define that skill set in-house or to develop it, but it's definitely worth it, and it's nice to know that there are tools available on the market to support. No panel, I guess, in 2024 would be complete without asking a question on AI. So I think, Ilya, you mentioned certainly, I guess, on the identification and verification part of things, I guess deepfakes is very, very present for you. Can you tell us a little bit more about how you are managing just the amount and the sophistication of sort of deepfakes that we're seeing now?
Yeah, I mean, we've actually been quite vocal about this. We've seen, I think, more than 10x rise in, deepfake attempts on our services, and the only way you can fight is to having like a Swiss cheese kind of approach with many layers of protection. And so it's trying to catch up people using virtual cameras, similar backgrounds, digital artifacts, and all of those, ultimately add up to us being able, with very high confidence, being able to say whether it's a deepfake or not. So yeah, I mean, it really depends on developing internal technologies and also having the flow of these fraud attempts to be able to spot them. That's only in the deepfake area. We use AI and machine learning in many other areas. It's things like detecting, say, for example, mule networks. You have real people trying to pass KYC with real documents, but actually the only way to catch them is because they're using similar locations, so same IP addresses, or maybe even the same background, like a table or the window behind you for passing those, and that's the only way you can catch it out. So actually, kind of AI and machine learning sits behind everything that we do throughout the whole process. Yeah, so it's very prevalent.
Any other comments on AI generally?
Yeah, we started AI machine learning back in 2017 for Bitcoin clustering identification. And now we are reinvesting, we are launching a new project because there's so many information that we have to deal. You have to monitor, dozens of blockchains and very complex blockchains like Solana, for instance. So machine learning could be very helpful in terms of how we can identify patterns, also for all the cross-chain. I know when you are moving an asset from a blockchain to another blockchain, how we can identify patterns. Machine learning can also help us in this detection. And also we're thinking of how we can facilitate the usage of Scorechain from a compliance officer, how we can use natural language, how we can define a prompt. I would like to monitor all the transactions between two wallets in 24 hours for an amount of 10,000 euros. And directly, the configuration the prompt will build the rules behind.
Oh, I would love that. That would be helpful.
It could be helpful. Obviously, there's a lot of checks, and we need to validate this. But it's also something on a project we are working on it. So on the back end, we can improve the data qualification and monitoring, and on the front end, we can facilitate the usage of the product.
Great. I did promise that we would open up to some questions. Does anybody have any questions for this compliance panel? I think it's the only compliance panel, so if you have a question on AML or on travel rule or on anything related to compliance, don't be shy.
Front.
Okay, let me make it the icebreaker. Would you say in general that risk management becomes simpler in a blockchain environment because it's so much technology driven, it's so much more automated, it's a shared ledger globally, maybe same standards globally, or is it just that new risks arise and what got simpler now gets more complex again, and net zero, it's the same, it's just different? Or could it really become simpler in the end?
I actually think it's becoming simpler if you use the right tools, because there's much more transparency, much more automation, so you actually can minimize a lot of the edge cases and focus the compliance officers on dealing with like really edge cases, as opposed to just manually reviewing millions of false positives. So I think actually that should make it easier. That being said, of course, that requires learning and implementation of the right tools and setting it up properly. And I think that's the paradigm shift that will take some investment. And as I mentioned before, it will also take acknowledgement from the regulator side that the tools you use and the process you follow are acceptable. So I think it will come from both ways, but it will make life for sure much easier.
I would agree that it's an interesting question, because I think when you look to the really bad stuff, sanction, terrorist financing, it's so much easier. And even talking to the UK regulators, easy to identify where there's bad stuff, and then you can stop it. And that's the whole point of financial crime mitigation, is to stop money going to the really bad people. I think on the edges, where it's maybe to the dark web, to ATMs, to gambling, where you may have a different risk tolerance, I think you're right. It's about risk configurability, as Pierre said. We need to fine-tune it, and you need to understand how best to use the tool. And I'm sure that's what Pierre does. That's what we do. We talk with the firms in terms of trying to help them understand how best to do that. But in the first instance, they must understand their risk profile, and that's actually one of the most challenging bit. What is my risk profile to do with doing that? Once you have, then you can walk through how to set it and how to test it, and then how to speak to your regulator. A lot of this data is there anyway. So the question is, how do you utilize it before somebody else utilizes it, really?
Great. I'd like to disagree a little bit. I think
you would, Lucas.
The tools are definitely going to make it easier, but how many of you know what the UTXO is? Okay, because in my opinion, stuff like that, you probably should know if you work in compliance. All the differences between how the account-based system versus inputs or spending UTXOs works, how the different mixers work. So all the knowledge side you need to build up, and that's the main challenge. From what I hear from our customers, probably the same for you. What they really want from me is being a headhunter, giving them compliance officers who already know crypto. That's my #1 request I get.
But can I just counter that as well? To say, I don't think you do need to know what UTXO is. Somebody might need to, but I don't think your compliance team needs to know. What your compliance needs to know is what is risk. What is your exposure to risk? What's your tolerance to that risk? They don't need to know the underlying technology. They need to understand what the mixer is and what risk that poses, but they don't need to know the technology of the mixer. So I think there are different levels. You need to have some people who can do investigations in crypto. That's where you need experience. So I think it's, horses for courses, as we'd say. Different training, different skill sets for front office, middle office, audit. And I think that's how I would split it. Sorry, I had to disagree with you.
Maybe from a practical perspective, somebody who actually is managing a team of compliance people who are learning those skills, I would have to say that it definitely it requires both. You need a compliance officer to understand what are the risk typologies, what is financial crime, and that same person has to be able to say, okay, well, it happened 3 hops back, it was 6 months ago, the likelihood that the beneficial owner is the same is XYZ, the sanctions happened actually beforehand, and therefore the risk has been mitigated. So it's a mix, I think. You're both right. Other questions from the audience? Gentleman over here. Okay. Yeah.
Yes.
Yep.
So this is a question regarding travel rules here. So what we are observing is that each solution is more expert of a different jurisdiction. And today, those companies that are operating globally, they need to combine multiple solutions. So could you talk about the blockers of building something global? And whether you're thinking, for example, of building a consortium or something?
Excellent question. Yes, the reason, in my opinion, that we have so many different solutions is because they like to be the middleman. You start a company, and then all the travel rule information go to that company takes a cut, that company controls the network, so you have different solutions who play that. Then we actually have an open standard from the Open WASP Association, where Chris is the president, is called TRP. So we as 21 Analytics, we implement TRP. SumSub has TRP. So you have different players who implement the same protocol. And that's our goal. Hopefully have a decentralized ecosystem again. But it will take, I think it will stay a mess for years until we have one clear winning standard, because the incentives are so different. Like, it's great to be in the middle. If you're the new middleman in a decentralized world, right? That's what many of those companies want, especially, I guess, if you have a VC behind you that pushes you to be the middleman.
And I would add to that, so partly why that happened is because of what's called the sunrise problem. So these regulations kicked into different countries in different times. So there are, local solutions that are specific to a country because they needed to do it before everything else worked. That's the case for Korea, Japan, other places. So what we're doing about what Lucas is saying is we're integrating other protocols. So I think in the next 2-3 months, we'll announce at least 3 integrations with other protocols. So we see us as a solution above the protocol level. Of course, like between our clients, there is a built-in protocol because they have to communicate. But other than that, we want to be, and we are, protocol agnostic. I think there are some pools or players that do want to build that monopoly, and I think that will change if one of the two things happen. Either the industry pushes those players to open up because they don't want to be integrating 3 solutions because they need to talk to VASPs globally, or what I think is actually more likely, that the regulators will come in and say, like with open banking, look, if you're a provider of travel rule services or protocol, you have to have an open API, and that will, I think, will force ultimately the industry to at least be able to talk to each other. Then you can choose just based on your geography and service and price and everything.
And just to add in there, so we're not a travel rule solution, but I co-chair a working group in the UK, which Lucas and his team are also on the travel rule, and we're coming out with good practice guides. And I think that sort of the areas of challenges they face is the fragmentation, the sunrise clause, the lack of interoperability. And as an ex-regulator, I mean, I've already seen it in sort of the derivatives region. It's a similar kind of thing. Regulation comes out, and there's no kind of interoperability to do that. And I think the third thing, I do question this sort of due diligence as to what standard due diligence. Again, you're having fragmentation of due diligence. Some will have no due diligence. Some might have the Wolfsburg questionnaire full due diligence, which is sort of a banking due diligence. And then this middle ground, FATF, the sort of the international standard setter, talks about due diligence, but there's general due diligence and there's travel rule due diligence. What does that mean? I mean, and then that's what I'm trying to work, at least with the UK regulator, to try and define what are the tram lines so that people aren't expending energy when actually the counterparty risk is slightly different when you only have an occasional style transaction for a travel rule.
But your question is well received, and it does reflect, I think, a sentiment within the industry that we know that there's a need to continue to interoperate, and we are working on that. But the reality is that commercially, there are some enterprises that have an interest to keep a ringed fence around the players that they allow within their ecosystem to transmit information between the counterparties. And we have some other great services that are coming up in the market that are really working hard on topics like interoperability and supporting the ecosystem. We have Nota Bene here. We have 21 Analytics. OpenVasp is an open source version of that, but we are listening. We're working on it.
And we probably don't have Trust in the room. I don't know if we do, but Trust by Coinbase is the main party, as far as I'm aware, from the industry that is willing to build and is building a closed ecosystem, not willing to integrate to anyone. So I hope we put a little bit of pressure on them by this rant.
For sure. Pele, you had a question.
Yeah, maybe not so much a question, but as just an additional comment into it. As I'm from Nota Bene, the third travel rule service provider here today. The big issue, just to answer the question from behind, on this rollout globally, it's not actually so much on the protocols, in my point of view, because the protocols is just a small technical detail. The hardest thing is actually getting compliance teams to create the workflows and then deal with the differences and complexities within different jurisdictions. So this is really what our team has been entirely focused on. And with this, we have 130 companies live, sending millions of transactions a month and all of these kind of things today, because that's where the focus has been on. Where we are protocol agnostic as well, but we actually think the protocols is really the least important aspect of this. And I agree, trust. Coinbase is a big issue. They're trying to use this as a global market way of controlling the markets and locking the other big players out of the market. But it's a separate issue. But the big thing, to roll it out globally, to answer the question of the previous person, it's not about protocols, it's figuring out how to build these tools up. And for that, industry associations are really important. Mark, what you're doing in your team is really, really good, and Chris as well.
And with Nota Bene co-chairing as well. I think the other aspect of the travel rule, which needs to be addressed, is actually how do you identify which legal entity you're interacting with. Now it's quite a complicated mechanism of doing so. Having some kind of legal entity identifier that you have in a MiFID world, but if you can replicate that, and I know steps are being taken, it makes that identification of, I'm actually dealing with this jurisdiction, I know what the travel rule obligation is in that jurisdiction, rather than having to sort of piece your way through it. I think that's another big piece of the puzzle.
Yeah, and I would maybe add to what you said, is that actually what I think people don't realize in the crypto space, that to implement travel rule compliance, you need to re-engineer a lot of your internal fund flow processes. So it's not just a compliance tool that it actually changes the whole philosophy, right? In crypto, you transact first, think after that. Here, you actually have to put a stop on your transactions based on this travel rule information exchange. I think that's what a lot of people are not realizing. So with the MiCA kicking in at the end of the year, I mean, actually now is the time to start preparing for it, because firms that do take it seriously, and we've been working with some of our clients, it takes actually months to re-engineer those processes on their side internally.
And I think just to add on, it's sort of a speculation here, it's a really simple piece of law, but it has a big impact in terms of operation. The question is, where do the regulators, legislators go once it's implemented? You're interacting with an ecosystem that may not be a registered person. So what do they do? Decentralized exchanges, all these kind of things. No one's touching it right now, but what happens in 3-4 years' time? What is your risk? So it comes back to your compliance framework. Everything you do needs to be set out in a compliance framework. You're dealing with some things which may not have KYC. What does your framework do to be the mitigant to those risks?
Mm-hmm. Pierre, you wanted to add?
Yeah, just want to add that travel rule has been like some kind of copy of what has been done in traditional finance, and without understanding really the new technology and the philosophy, not the philosophy in terms of how the technology is used and how we can directly transact with someone. And I think this is a big mistake from travel rule that has been like 5 years, I think, very long, and we see that it's very difficult to implement. And if we think now about how we can implement travel rule in DeFi, so it should mean that we would like to have to whitelist all the other counterparties first. So I think it's very complex. I'm happy not to be directly in the travel rule industry, but I know we have to deal with customers every day because they are lost. They don't understand protocols, the different providers, and also how they have to rebuild all the processes because all the flows are different.
I agree with that, Pierre. And I think it's important to spend some time to demystify, maybe in the last few minutes, some of the more sticky topics that we see in the area of compliance. We haven't had a chance to touch about DeFi, but we should probably mention a couple of comments. I think it's important also that to note that, generally speaking, regulators have been very heavy-handed in giving out guidance, not necessarily in favor of privacy mechanisms. I think it's important for me and also for the Open VASP Association and for the various hats that we all wear, that we continue to be aware of the importance of supporting education around privacy mechanisms. Not all privacy mechanisms are necessarily inherently bad. And if you are in the compliance space or if you are in the risk management, risk assessment space, it's important to work closely with your engineers to really understand what is a mechanism, for example, that really has the only intent to obfuscate the trail of funds, and which privacy mechanisms nevertheless allow for compliance and for visibility of transactions, because there are some out there available in the market. So on that note, DeFi, what could you say, what would you like to tell the audience about how DeFi is making strides in terms of AML, KYC? You wouldn't think, but there are actually a lot of ways in which we are infusing and bringing in visibility and transparency into the DeFi space.
I'm happy to go again. So I think the world has changed in terms of the players, Whereas before, maybe they just didn't think about regulation. I think DeFi pools and DeFi smart contract, they're building it into their protocols now in terms of some kind of KYT, at least, in terms of assessments. There might be zero proof or KYC. So I think they're building it. I think regulation has to catch up with it, because I think zero proof is just not quite there yet when I'm looking at the UK law that I was closely amending. I think the other part of it is looking at risk exposure of a pool. If you're a big US investment bank and you want to interact because you want to have 24/7 transacting and you want to avoid certain costs, who are you actually transacting with? Will the SEC allow you to do that? You know, that's the questions that are coming in. But again, there are mechanisms of actually looking at risk of DeFi pools. And as I said, some of the DeFi, the contracts are actually building in some kind of KYT before you on-ramp into the pools and then when you off-ramp.
Yeah, I think we as SumSub would be coming at this clearly from the identity point of view and the KYC, which is, I think, the biggest question. How do you do KYC in DeFi space? And we've spoken to many companies that have developed technological solutions to solve this problem, whether it's zero knowledge based or soul-bound tokens. The issue is that you still need to identify the person first, and there has to be some sort of source of trust. And secondly, how do you make that compliant? So for now, unfortunately, that link is missing. And I think there will need to be a kind of a public-private discussion on how do you change the rules to not break the system, right? You know, it still needs to be, you know, based on smart contracts and decentralized. And you need to be able to enable, you know, compliance there as well. So hopefully we'll be able to bridge that gap as probably one of the biggest players in the space.
Great. Thank you. Lucas, Pierre, we only have 1 minute, just quick.
Quickly, yes, one challenge would be to bring all this information on-chain, because you are dealing with terabytes of information off-chain to monitor everything. And the challenge how we can bring directly at the level of the protocol, of the smart contract, all this information. But maybe it could be an opportunity that directly smart contracts, DeFi, will implement rules, regulatory rules within the protocol. Not for tomorrow, but maybe in a few years we can imagine this kind of implementation.
But this comes back to private-public. This is where regulators and industry need to discuss to understand how mitigation up to that risk is happening, I think.
Lucas?
Just, I'd like to say, do mixing. Ask your engineers how it works. Let them show it how it works. It's totally compliant. It can be 100% legal. It's good for your privacy. It's good for the privacy of your customer. You should really do on-chain mixing.
It's called an exchange, actually.
That's the best mixer indeed.
All right. Thank you, ladies and gentlemen.